Hey everybody, welcome to the Curzio Research YouTube channel and welcome to Creech's Corner. I'm Daniel Creech, research analyst here at Curzio Research, and today I'm going to be talking about stop losses and exit strategy and why I'm going to pound the table on why you must have an exit strategy and exit plan before you even enter any investment or trading opportunity, please. But before I do that, go ahead and like and subscribe to the Curzio Research YouTube channel. That way you don't miss any of our content. We want to reach out and help the individual investor as much as we can. We're going to put a lot of content on individual stocks, macro ideas, an extension of our podcast. Check out Wall Street Unplugged that I get to join the one and only Frank Curzio on Wednesdays, and then Wall Street Unplugged Premium on Thursdays. Check it out, like and subscribe. Thank you in advance. Stops, exit strategies, not a lot of fun to talk about. Nobody likes losing, and let me admit right away, I cannot stand, don't have hate in your heart, but I cannot stand, I hate if I was playing hangman, I'm at HAT on losing, being wrong, admitting I'm wrong. It's humble, it's humbling, and nobody likes it. Let me get that out of the way. But you must, before you enter an investment, whether that's a long-term idea because you think it's going to compound over time or you think it's a great short-term trading opportunity, you must have an exit strategy in place before you click on that investment or trading opportunity to buy, because it's going to eliminate your emotions, which you want to keep out of investing, because if you're going to be swindled or swayed by your emotions, you're going to be very reckless. Learn from me. I'm going to share a mistake that I made in a trade, but also show you the value or the lesson to learn that hopefully you guys can understand, learn from, not repeat my mistakes, and improve your investing overall. Let's get right to it. So this is WW International, formerly known as Weight Watchers. And as you can see here, this is a chart showing most of 2023. So on the left side of your chart here is not exactly January, but you can see February, and then this goes through roughly the end of 2023. And you can see shares were bouncing around. Now, I was looking around here and thought, hey, I want to get into this trading opportunity around the $10 level. So in September, I recommended shares of WW International, and we got in for $9.70 per share, $9.70. This was very short-lived. As you can see, this is the same chart I'm showing, just new scribbles. After this quick rally, or say to over 1250 that was short-lived, about a month later, a little over a month later, the stock was selling off and boom, triggered our stop of 15%. We actually got out for an 18% loss at $7.98, as you can see there. So this was a very short-lived serving, a very short-lived trade, and then a massive serving quickly of humble pie. Lost a quick 18%. That sucks. Now, it's not that I didn't have a thesis or a plan in place. I did. So that's the only value here, because unfortunately, you're going to be wrong, okay? Trades like this, and you can play Monday morning quarterback. I'll get to a little bit of my thesis in a moment. You can say, oh, this was just such a stupid idea, and look what happened. That's fair criticism, I understand. But the real value here is you have to understand that whether you make investments or trades, not all of them are going to work out. And I'm not making excuses here. This was a bad trade. But I am saying that you need to understand, and I don't want to preach to you, I'm just sharing this so that you get better. It's important, in my opinion, to understand the context or the environment you're in of trading. And if you want to use an analogy to sports, think of baseball. Now, one way you can say, some of the best offensive players, some of the best batters in baseball hit around an average of 300. It's my understanding that if you hit anywhere near 300 or above, you're going to make multi-millions of dollars. Everybody's going to love you in the baseball world. Said another way, you are a failure. You are unsuccessful. You do not get to go run around bases. You don't hit home runs 70% of the time. If you're batting 300, that means 7 out of 10, you are a loser. Now, I'm having fun with that, of course. It's part of the game. striking out, missing, it's part of the game. And I'm not making excuses for any baseball players. I'm simply telling you, if you are trying to be a great baseball player and you're going to get frustrated and hold on to and not be able to get over a missed opportunity at bat, you are in for a long, frustrating, painful, and probably unsuccessful ride. And so the idea here is, when you make mistakes, understand them, evaluate them, improve them, and move on. Don't continue making the same mistakes. Don't just keep holding on, changing your thesis, justifying it, or whatever. Now let's get back to my mistake here. We stopped out just over a month later for a quick loss. Now, what was my strategy? And here is, I took a couple of screenshots and just I'm showing you, again, I was completely wrong. There's nothing wrong with that. But I'm going to explain to you what my thesis was and what my exit strategy was before we even entered this trade. Now, at the time, remember, we're going back in the time traveling machine to 2023. So a lot of different moving parts between now and then, of course. But at the time, there was a newer CEO, Nsima Sistani. She had a great story. She was once a customer at Weight Watchers, has a family very involved in and educated in nutrition and such. She was a successful Weight Watchers customer, and then was really trying to transition this company into a brick and mortar, meet together on Tuesday nights, discuss things, life choices, et cetera, to more of an online platform. This is also coming out of COVID just a few years earlier. Remember, we're talking about 2023 here. And you had a lot going on. So a newer CEO, a transitioning business model from brick and mortar to more focusing online, cutting costs. That's what every new CEO looks to do, improve efficiencies. So we had a lot of momentum, in my opinion. And getting back to the stock chart, it was hanging around that $10 mark. And I thought, this is making a good thesis, and they are trying a lot of things. And you're going to get this kind of wiggle room with a new CEO. And although earnings weren't that impressive right out of the gate for her, the gross margins were increasing, showing the cost cutting was working. Now, the other aspect I liked in my thesis, and again, you can build as long a thesis as you want, but you want to have some sort of a plan. I'm simply sharing this one to you. And it can be much shorter. It can be simply a technical trade. If you're looking at a chart, it can be a new CEO. It can be a gut feeling or a hunch. It doesn't matter why you're entering into the investment or trade. I'm simply telling you to have a plan no matter what when you want to exit. Now, WW International had also just done a game-changing acquisition, in my opinion, because they bought Sequence, which was a very fast-growing telehealth platform, and they were going to be able to offer, through their specialists, these GLP-1 medications. Yeah, that's a buzzword, because Wegovy, Ozempic, and all these wonderful drugs that are helping people lose weight. Yes, there's some side effects. I'm not a doctor. I'm not getting into that. But there is an absolute craze and a ton of momentum in this weight loss drug. It's basically like a magic pill or a magic shot. I'm having fun here, of course. But Weight Watchers was getting into that type of business model, that new growth component, that new catalyst to really push the entire sector and shares higher. And so I thought, wow, this is really coming together. I like the CEO story. I like the newness. I like the cost-cutting measures, the business transition, this idea to get into this massive growth opportunity with GLP-1s. And then here is just a screenshot I took back then. And you can see that shares of WW International were moving in this channel. And when shares sold off to the bottom end of the channel, I said, hey, we can, in addition to everything I've outlined here in my thesis, looking at the chart, it's falling down to this range in this channel. This should act as support. We'll use this as an entry point. And if we're wrong, we'll give us some wiggle room. I picked a 15% hard stop, and we'll just see if the trend holds, if the new CEO can continue its momentum. And I just said, listen, if the uptrend fails, we hit our 15% stop, we'll exit the trade for a loss. Now, I was excited about all this and this game-changing acquisition, the GLP-1s. Why? Well, because Eli Lilly, the big dog, the medicine maker, in 2023, you can see here, starts right under the 350 that I've scribbled on here. Eli Lilly went up 150% from, call it, 2023 until it hit 900 per share in call it the summer of 2024. So a little over a year, it went up 150%. But you can see from this August-ish time frame, it was around just under $500 a level, and it zoomed all the way to over $800, or give or take, by the end of the year. And so I thought, hey, Weight Watchers International stock is around $10 a share. It's got all this momentum, a lot of catalyst. This thesis I put together, looking at the stock chart, piggyback off the GLP-1s. And remember, all that was for nothing because in a month, I got stopped out. Frustrating. Now, where is the value here? And the reason I want to point this out in this losing trade is because I've done this in the past where you change your thesis or you justify the stock going against you to hold on. And one of the biggest reasons I do that, again, I want you to learn from me and my mistakes, is because losses hurt in some cases more than winners, or the risk or the fear of loss versus winning. And I'll get into more of that. I've done a lot of fun reading on the psychologicalness of investing and such. But the point is, I've been there and done that. I've had stocks go against me for whatever reason, and then I hold on to them and I change my mind or I change my thesis. That is one of the biggest Florida mistakes you can make. And when I say Florida, I don't mean the beautiful state I call home right now. But this is a family podcast, okay? So Florida means the other F word that's funner to say. If you just justify, and how could I have justified this? Well, I could have said, look, this stock, when it stopped us out, it bounced around under this 750 and then rallied back towards the $10 level at the end of 2023. And I could have said, listen, we'll just give the CEO more time. You know, she's only been in at the helm for a few months, only 1 quarter of earnings under her belt, and we want to give this time for this new acquisition to able to bring these specialists on to offer this GLP-1 drug, because we can see clearly through the other Eli Lillys of the world and such that this is working. This is the new growth phase. I could have then continued to say, well, we'll hold on for another quarter or maybe another 2 quarters, and we can also average down. I could add into my thesis. But see what I'm doing here is I'm justifying and I'm being led by my emotions. I'm not doing any more fundamental research. I'm simply clinging on to what I had, and I'm hating to admit that I'm wrong and move on. And that is the biggest mistake, or one of the biggest mistakes you can make. Why? Well, because even though it sucked to watch this rally back towards the $10 level, if we come here to reality, on the left side of your chart here is the start of 2024. So, and I apologize, it's not very clear here, but this is the $10 level where the stock chart starts on your left. This is 2024. From 2024, after we closed out of this trade until present day, the stock has fallen an additional 93% to under $1. It closed recently at 55 cents per share. 93% from the levels that I was dead wrong, that I got embarrassed on in just a month's time eating humble pie. That's why you don't continue to hold on and justify your losers. Remember, we are going to have plenty of opportunities. This is just an animated picture from Grok 3 beta version, a little stock guy you can see there, and waiting on another pitch, because it sucks to get them wrong. It sucks to lose money. I understand. Learn from me, learn from us here at Curzio Research, and do not make the same mistakes over and over again. With WW International, I had a thesis, I had a plan in place, I had an idea, but I also had an exit strategy. I also had a pull the cord and get out, admit when I'm wrong, and move on. And thank goodness, because this chart right here shows you that if you just continue to hold on to something and justify it, the absolute energy and emotions that you're going to spend and waste is going to impact all your other, maybe not all, but significant decisions going forward with more of your investing and more of your trading opportunities. Now, quickly, it doesn't matter. There is no perfect system. And I know there's people out there that make great macro calls, make great individual calls, but the individual investor is not going to consistently pick the top of the market and pick the bottom. This is very much, last sports analogy, investing, in my opinion, is very much like golf. You're never going to be perfect. You can go out and shoot the best score of your life. You can always improve. And the idea there, just like baseball, is to have a short memory. Understand that losses, not every trade or not every investment you make is going to be a profitable one. That's just part of it. Learn to have a short memory, go into all of these investments and trading ideas with a plan in place. It doesn't matter if you want to worry about or use stop losses, a hard stop, which simply means that whatever your cost basis is, you put your stop from that level, or you can do a trailing stop. So if you buy a stock at $25 and you put a 20% stop on it and it rallies to say $30, your stop follows or trails the stock higher. So then if it falls from 30 down to 24, or if it falls from 30 down 20%, then your stop would be triggered, not from the 20% when you first got in at 25. I can get more into that in detail. My point is, have a plan before you execute and enter the trade or the investment. As you can see here, yes, I took my lumps. It was a quick serving of humble pie, but the value here is that I stuck to the plan and avoided a lot of wasted energy, time, and emotions, and also I avoided a 90% plus loss from $7.98. Questions, comments, love me, hate me, don't ignore me. Daniel@CurzioResearch.com is my email. Send me your feedback, please, and thank you for tuning in here at the Curzio Research YouTube channel. I'll see you guys soon. Cheers.